All right. What's good? Serge in the building, John in the building. See you guys. Happy holiday to everyone. Promise I'm not going to take up too much of your time. Let you guys get back to the family stuff. Enjoy your freedom. I'm doing good, my man. All right, I just want to make sure I can get this all posted on the Facebook side. So I think we should be good to go. All right. And I can catch you guys here. I can see you on the phone here. So, all right. All right, let's go ahead and get this jumping. I know it's at 7:05, the stream to start. But we're going to get this thing started right now. All right, all right. So welcome to Game Plan Sunday. Today is September 6, 2020. We're going to take a look at what occurred over the past week and what we noticed coming down the pipeline this week. Take all that information and see what we can do to make some money. So last week was very, very interesting because we finally got a sell-off. And our timing was actually pretty good as far as Game Plan Sunday last week episode. If you didn't watch that one, make sure you go back and catch that. We were actually talking about the markets here. And we were actually taking a look back at the NASDAQ at the .com bubble. I was making comparison of now and the .com bubble because what I saw looked very, very similar to that time. Look very similar to that time as I was mentioning. Let me take you guys back to a chart just to rehash that. You guys can see what we're talking about. So what we did is we went back. All right, so what we did is that we actually went back to the .com bubble phase here, which is right up in there. And we was talking about the mean. The price action was so far above the mean, and then it got that nice snap back to the mean, and then it broke. And then what we were seeing here, what we were talking about is that the price is so far from the mean. Normally it tracks the mean. You see price normally tracks here, stays in that zone. Even if it goes far away, it comes back. And so it's far away to the upside. And so it's calling for a snapback sometime soon. And we're starting to see that starting to take place now. Okay, so that's what happened over the past week. You know, what goes up cannot stay up forever. All right, so if it goes up, it's got to come down. Here, again, just taking a look at the NASDAQ itself. It came down to the, it broke the, on the daily, it broke the mean there, and it came down to the 50 moving average. And 50 is a great point where, we can really get a little more sentiment information from the institutional investors, big money that's moving the markets, and they like that 50 moving average. What I'll do is take you guys to let's take a look here at the S&P 500. Let's get this removed real quick. All right. So just taking a look at the S&P 500. Normally that 50 moving average is a key signal that, the big players are really watching. And on my chart, it's this pink line here, this 50 line here. And I think it's critical here that the market stay above that line. Now, if the markets break under that line, so goes the confidence of all the big money players. All right. So this has always been the case for the markets. If we go back in time, we can see, how well it held up at this level, like in particular here. And then once it broke, all hell broke loose. So even if we come down some more this week, it wouldn't be too bad, to be honest with you. It'd actually probably be more favorable for the markets to get this pullback here, which if it comes down here to the 50, then that's still in a healthy zone. But if we snap this, then that is not healthy. Then you definitely got some other risk at place here. And the thing is that, if you guys have been trading with us over the past, few years here, one of the things, let me get that off the screen, excuse me. But yeah, so one of the things was that we had in 2018, let's see, so 2019, let's go back a little bit. Here we go. So back in 2019, something similar happened. Right now, where, we're getting a lot of distorted market evaluations and things like that. And we'll talk about some of that when I'll take you guys to the site, where the stocks are just going up just crazy, right? And it's not even off of fundamentals. So a lot of it is just going up, for like pump and dump kind of reasons. And there was a story that came out this week actually talking about, SoftBank is, one of the institutions that's been pumping and dumping these stocks. Basically, we've been seeing these crazy, prices in the stock market that does not match reality. So we are playing in some distorted ground. So it's really, really tricky right now. And this is all because of the Fed's, interference in the markets and intervening. And, the financial markets are the ones who's basically benefiting from this. And we wrote an article about this as well, telling people, hey, you need to have some assets because it's the only way you can participate in what the Feds are creating. And so, the financial markets are actually, benefiting off this massively. And so we actually saw some of that last week, and I'll tell you about a little bit of it. But I wanted to highlight here is from the last time, this was back in, September timeframe as well. Okay, like right back in here, where the markets gave us a hissy fit. And when we got that hissy fit, that sell-off is the only thing that made the Feds react. So the Feds are playing hardball. If you guys don't remember, the Feds are playing hardball with Trump. Trump was beefing with the Feds. Trump wanted low interest rates. Feds are like, nah, they were still raising interest rates. And in this meeting here, this was the last time that the Feds raised the interest rates. And when they, did that, the markets wasn't having it. And so the markets sold the hell off. Now, this caused a lot of, craziness and distortions in the markets that forced the Feds to intervene in repo markets. They had to pump liquidity into the markets. And this is what saved, the day here. And so that sell-off came and they stopped, raising rates and started just basically letting it float. Say, hey, we're not going to do anything anymore. And then from that moment, everybody pretty much knew that the Feds are going to just be cutting the rates. And when the coronavirus thing took off and they cut rates all the way to zero quickly, then you got that big old massive, rally. So I think that the markets would like for to have a nice pullback because really the Feds they're paying attention to the markets. The markets is a significant for confidence, right? So if the confidence in the markets is dead, right? If that leaves, then so goes the rest of the world markets. Is going to just go falling with it. So they got to do everything they can to keep this thing going, keep the illusion going, basically. But I think just like we got this reaction back here, we have Feds intervention that came in from all of this. If the markets pull back, I think that it end up forcing, the Feds and the government to react, much faster, which the markets will benefit from it. So it's a tricky situation because you're trying to figure out like how will the markets behave towards these things, and you got to understand the stimulus has not passed yet. So we still don't have a stimulus that has passed yet. And last month was the first month that we had that. The stimulus was cut. So those $600 payments that we're giving people and everything, that last month was the first month for us to actually get a little, measure of that. And I just don't really think that the markets can withstand that, going into, for the remainder of this month. I think they're going to have to make a deal this month because if not, then I think it's going to be chaos. And again, we had another report that came out this week of, I think, 40 million rents that were people that's facing eviction. And again, they passed moratoriums so that, the landlords can't kick these people out. Now, the landlord, most of these guys who are landlords, they depend on that cash flow for them to pay their mortgage. And so if they can't get that cash flow, they're going to lose their house, right? So, they're trying to make decisions from a moral perspective, like, hey, we can't have people on the streets like this. But at the same time, the medicine, it always has some side effects. Let's just put it like that. And so I think that we have a lot more risk coming into the markets as of right now, September up into the elections. And I think it's going to get really, really volatile. If you guys ever traded during any election seasons, it's always super volatile. But I think that this is going to be a much more volatile year because it's so much at stake. This is an election like none other. We have an economy like none other. In a Great Depression, basically, although we haven't really felt the pain yet because the Feds are I guess, doing a good job at keeping the hope alive. And but we have a lot of beef between, the Democrats and Republicans about how they're going to split the pie. And that's why stimulus still hasn't passed yet. And that continues to go on. People are going to hurt while they try to, get the edge over each other. The Democrats are going to definitely try to bury Trump. They want this thing to look really bad and be really bad under his watch. And so I think they want to hold out until they get what they want. That's a little pressure. Trump, on the other hand, he kind of needs this thing to work out for him. And, if, you put 40 million people out in the streets, I mean, you're definitely done. So it's real tricky. It's a lot that's at stake right now. So I just wanted to just highlight that as far as like where we are. Let's see if I got. Okay, let's pull up the website. As you guys know, on the website, for those who don't know, on the homepage, when you come to the homepage, the chat room is not available here. So I know some people's asking, hey, where's the chat room? You got to be logged into the site and you have to kind of get in here. So I'm gonna just go to the news feed so we can actually see what's cracking here. What's good, Terry? I see you, my man. All right. And remember, we got the events calendar that's here, so you guys can actually check that out. Let's switch over to Ray real quick. The events calendar is like right up here. So it's right here on your news feed. You can see that tomorrow's Labor Day observation. So remember, tomorrow, the markets will not be open. So you guys can chill out, relax with your family. You don't have to be, cooking your nose up in the screen. Just be a human for once. That's what I'm trying to learn how to do these days. And anyhow, I do have this posted in there as well. The presidential election, which is coming up, and we have less than 60 days. And so this is a really short time frame. Anything can really happen in this time frame, and the markets are going to be swaying based off of that. So this is an article that's on the website here. Let me just minimize this a little bit so we get some more screen. Yeah, this is the article right here about SoftBank was behind the manipulation. Right. It says SoftBank identified as the NASDAQ whale that bought billions in stock options, betting on higher prices for the biggest names in tech. So when we saw that melt up in the stock market, again, let's go to the NASDAQ. All right. So I'm just, checking out this whole melt up the situation that we got here. Let me just remove some of this. Basically what they're saying is that this SoftBank, this Japanese bank, along with some others, they basically pumped this thing up, right? Because again, the economy is weak, but the tech stocks, you see, when they came off of those, when they broke this level here, they've been, the performer here. So everybody's just been buying all the tech stocks, right? Because of the transition for COVID, people are transitioning into being online, online training, online teaching. We've been teaching for 3 years now, Wall Street Jab Boy. So way before Zoom, nowadays Zoom is free. So people got Zoom. Everybody's a teacher nowadays, which is just weird. So, but like I tell people, man, hey, if you want to go train with just anybody who has Zoom, so be it. We have a website. And for me, if you don't have a website, I mean, you're not even for real. So, if anybody wants to, train with those guys, so have it. But, a lot of that's what we're looking at here, right? A lot of these tech stocks, people are betting on things transitioning into the internet phase. And I think that they are over optimistic, to be honest with you. As you guys see, like even with our platform that we're using now on the YouTube side, you guys can't really see it, but in our platform, I actually spend top dollars to have this technology. Been spending this money on this for years. It is far more superior than Zoom. As far as teaching and things like that, it's just a whole lot better. And so, I have kids that's in school and I hear the horror stories. My kids are not in public schools right now, but they have friends who are, and the horror stories about the teachers trying to teach. And I mean, it's so ineffective from my understanding. People are hacking into the rooms and doing pornographic type stuff. I mean, it's really embarrassing. So I think that, they're over optimistic about this thing. And I think that some people are trying to find a way to get back into classrooms. And so I think a lot of those bubbles are actually going to start to deflate, but we'll see, right? Online, it could, I think that it's eventually going to go online, but I still don't think we're there yet, especially not Zoom. Like I said, the technology we have is far better, but it costs, a premium, but Zoom is actually kind of free. So everybody can use that, but just because they got Zoom don't mean that they're a teacher, right? Anyway, So that's what we're looking at is the text blowing up. When you looked at the Russell, right? You looked at like the Russell and the S&P. Yeah, they have not been able to clear their highs. I mean, look at the Russell here. I mean, straight up, right here at the 127 extension 1600 has not been able to clear this zone right here. It's got rejected right here. It's got rejected again right here. The previous highs are way up here. It never got to its high, but remember the technology stocks popped up to those highs, and that's why it's a lot of hope and optimism from that, but not off the fundamentals. And so you see names like Zoom and these tech stocks is popping crazy. I don't know what's these things popping up, but all right. So anyhow, that's what we had on there. On the website, here's a IPO list. I know some people are interested in these IPOs, so I'll put together a little IPO list for you guys. It's right here on the website if you want to take a look at IPOs for 2020 so far. But we did have some economic news that came out this week. Let me actually just take us back a little further here. All right, so we had the non-farm payroll, the numbers that came out here, and we had the ADP numbers that came out as well. And these are actually all positive things. These are all positive prints in the markets, and these positive prints here were positive if you look at the surface, but if you look at the big picture, they were actually not so positive. The expectation of the markets with all the stimulus that we have in the markets were that, we will see a lot more, better growth. And we're basically looking at a little stagnation. I mean, when you net some of these things out, when you net some of these things out, basically they're kind of not really showing growth really. You got these extremes, and then these low amounts. And I think that the market is expecting this thing to be a whole lot better for this recovery, because typically in this quarter of the year, business slow down. That's just the way it is, and that's why they got these holidays at the end of the year, like Thanksgiving, Black Friday, and Christmas, to pump the markets up. And I just think that they failed at these expectations, and a lot of this, comes from what we're talking about with these companies. The small businesses, and the majority of the economy is made up of small business. And so what we notice looking at this data here, and again, the links are all posted on the website, so you guys can check these out. I got some things highlighted, so if you just want to take a look at the quick and short, you could just look at the highlights and read these things. But a lot of this is small businesses not hiring, right? It's the big businesses, and this is the distortion that the Feds have created in the markets, where they pumped up the big stocks as well, like Amazon and Netflix and Facebook, where small businesses are shut down completely. I mean, a lot of these businesses are not coming back, which is interesting. So, but they are, in the numbers, the reason why the markets were kind of puking. Remember, these numbers came out Thursday and Friday, when the markets had the big sell-off. So you saw, positive economic news, but it wasn't actually really positive when we actually put the big picture in, that we didn't get the numbers that we were expecting for this thing to be this V-shaped recovery that they're looking at. And so it's kind of like, well, now or never, you have to get this thing together, because it's going to slow down. And so that's why I think a lot of the risk is going to be coming in from that. And so, hiring slowing down. In fact, I think Ron even posted on the newsfeed, a lot of airline companies, are, already talking about cutting a lot of jobs starting next month. I think some of them are even now, like U.S. Airlines, American Airlines. And in fact, from the job reports, I mean, a lot of these jobs that we're actually hiring were jobs that, they laid people off and they're trying to, bring people back, actually. So again, this is still trying to get people back to work, which is still an issue right now. So again, the economy is still weak. The numbers were positive, but the big picture is still not recovery yet. So again, I don't think we're going to see that, and especially if we don't get the stimulus passed in time, because if the Feds or if the government react too late, then it's just once the confidence comes out of this thing, it's a wrap. So anyhow, just wanted to show you guys that, and let's get back to the markets here, and then we'll go ahead and bring this to a close. So basically, taking a look at let's take a look at the VIX. What's good, my man? Cool, Jack. I see you out there. Say Kentucky in the building. All right, so this is something else that's been on my radar is the VIX itself. And this is the VIX futures. And so just taking a look at the VIX, how it's been behaving. Let me actually just pull it over on the index. Got a lot of levels in here. But basically what I was seeing here on the VIX, we was talking about the VIX as a special place of interest where fear is going to be coming into the market. So that's why I was looking at that is once it hit that floor and it started to bounce off of it like a basketball bouncing off the floor, you know, this was, you know, cautionary to me. Hey, we got to take some caution because the VIX is rising. That means fear is coming in. So the markets was actually going high during this time, but that was dangerous. And so then we got that pop up. That was Thursday, crazy pop up. And then, you know, Friday, that pop up as well. So I'm gonna actually just take us in a little bit so you can see this a little better. All right. Yeah, so we got, you know, some big moves in the VIX here. And as far as the market internals, let me switch this over here real quick. All right. What's good, Zay? I see you, my man. So yeah, so taking a look at the market internals. I know my man John, you know, a lot of people ask about the market internals. And I want to say this because I don't want anyone to feel discouraged about anything. I think it's great that you guys want to learn a lot of stuff in the markets. And you know, I've been doing this for, you know, quite some time now, and some things I find more useful than others. I just want to bring it to your attention, you know, is that there's no holy grail indicators. You know, before you going down a rabbit hole of anything, just know that there's nothing that's a holy grail indicator. So I do use a lot of things that, you know, guide my insight. And, you know, sometimes I get it right, sometimes I get it wrong. So, you know, again, I had it right this week and I know it looked good, but it's not easy to read some of these indicators as far as these market internals. But as far as what we were seeing when I was, you know, talking about, you know, a lot of this action in the market that was really, really strong, which, you know, caused me to flatten out my positions, which I, you know, was encouraging people to, because we saw, you know, the internals hitting levels that were, you know, crash-like levels, you know, where we see crashes happen. And so in particular, point of interest here is this this tick indicator. And the way I got this divided up is like, this is the this one here. Let me actually switch over. Excuse me. So this right here is the Russell. So I'm gonna just put the RUT there. And then this is the NASDAQ. And this one here is this is basically the whole New York Stock Exchange. So, you know, just in these columns, if you guys take our courses, I taught you guys about this triple screen system that we have set up for your stocks. But I also use this kind of setup in my internals where I'm looking at just to try to pinpoint where the action is going, where the flow is going, and to try to get in on those waves. But again, just remember there's no holy grail indicator, but I do use them. I just don't ignore them. That's why I want to get to the point. Doesn't mean I'm going to make a move off of it, but I do not ignore them. And so when I see it, you know, I have to actually compile a lot of other information with it as well. So, and then along with those things, I have the VIX down here. So I'm also monitoring the VIX at the same time. And so when I'm monitoring the VIX, I'm looking at, you know, support levels and things like that, resistance levels where the VIX is going at. And if I see strength in the VIX, then, you know, hey, that's cautionary, right? And so anyway, from this past week, we got like these zones down here, negative, anything beyond negative 1200 is just terrible, right? This like the markets is just as having a fit. And so, you know, these are extreme levels that we saw. And again, you know, on the positive side, you get some positive, you know, extreme levels there as well. And so that's why I say it's a little abstract to really, you know, to make it as clear for you guys. So it's a little harder to teach something like this, you know. But I think I was telling John that, you know, my mentor actually wrote a book. And wow, this is an old one. I think he has a new version. But, you know, this book here, called Mastering the Trade, he pretty much goes into these market internals. And so I would recommend that if you really want to, deep dive onto these things. And then, of course, your real learning happens when you're like live in the markets and when you're actually, seeing this stuff, behave, so you can make some decisions here. So, but again, this is just, lots of, we're just, watching, the underlying, situation. It's like cracking open the hood on your car and really find out what's going on. If you have smoke coming out the front of your car, you don't know what it is, right? It could be your radiator, it could be your water pump, it could be I don't even know all those different things, but it can be different things. It could be a busted hose or what have you. It could be a thermostat that's bothersome. And so this is like taking a look under the hood of the stock market itself. It's like, oh, we've got some underlying issues here. And so from that, I kind of will make some maneuvers. And I made a good call this week, telling you guys, hey, this is not, dip buying. This is get the F out. All right. So this is live in our chat room. So again, when you guys are on the website, once you log in, and if you haven't registered, make sure you register, because registration is pretty much free. It is free, actually. But yeah, so we can see like in the chat room right here, this is the chat room. This is where we're hanging out at daily. So make sure you guys come out and hang out with us. Chat room is free. Most people charging $200-300 a month for a chat room. Ours is free. Got it small here because it can follow you through the website, but you can make it bigger if you like. And then you can do individual chats with your colleagues, friends. You could do video calling, everything you could do on Facebook, you could do at Wall Street Jack Boys. So this is what I'm building here. So I spent a lot of time trying to get this stuff together for you guys. So again, I appreciate any feedback that you guys have for me on the website, features, benefits. And let me show you guys something real quick, because if you guys do, if you know someone who could benefit from Wall Street Jack Boys, then I definitely want to encourage you to invite them over. And the way that you can invite them to Wall Street Jack Boys, you can do it directly from your profile on the website. When you're on your profile page, you'll see your picture. If you don't have a picture, make sure you put a picture on there, because don't nobody want to ask somebody who they don't know how they look, right? So you should put a little picture here, your bio and all that stuff. But here, there's this thing called email invites. So you can invite your people to the website from the email invite. So you don't have to actually tell them. I mean, you could tell them, I definitely want you to tell them, but you can actually send them an invitation from the website, where the website will actually facilitate that process for you. And all you got to do is just put in their name and put in their email. And then the site will actually, send that out for you. Just let them know, hey man, I sent you an invite to the Wall Street Jack Boys. Make sure you join. All right. So that's how you can get people to join the website. Definitely want to thank you guys for joining us and helping us to grow Wall Street Jack Boys. When I had, crashed the old website, I basically destroyed it, and I rebuilt this platform that we have now. I was on Facebook a little bit. I try not to talk a little ish, but when I tell you that we are the best, we are the best. There's no other trading platform, nobody else who can duplicate Wall Street Jack Boys, as far as what we have here with our website. And the platform is not just like a regular website. It's a platform. It's a lot of other, benefits, but you can hang out. It's got social things in here. And then you also have the education as well. So if you want to learn, you can do all of that as well. Connect with other people. It's no garbage. So definitely make sure you guys check it out. And, get your people over here, man. Get your people over here. You got your certifications and all of that. You got your badges, awards. People say, hey, what's included? When I tell you, anybody who's been here since the beginning, I used to teach. Ron is here. Ron can tell you. I used to do webinars live every week, right? And the old website, this is what's different. The old website, those classes were the live webinars. And those webinars will go an hour to 2 hours long, okay? An hour to 2 hours long to teach you something. And I did it, and people loved it because it was live, right? And we used to be turned up. We used to have music and all that, which was fun. But when you do it this way, when I decided to design this new curriculum and everything, I wanted to be mindful of your time. Okay, how can I teach you guys that same level of value or even greater without taking up an hour to 2 hours of your time? Without me going into a Zoom video conference and doing all of that. And then say, we got people on different time frames, right? We got people that's out in Texas, we got people out in Cali, we got people out in Detroit. I mean, we got people all over. And so if you're on different time frames, what if you can't make it when we're doing a live webinar or what have you? The course itself is self-paced, so it's on your time. And basically, the way we designed it is, again, this is all, pretty much current information, current, You know, it's not outdated like a lot of these people's, courses and things are really outdated. But if you go in here, you actually see that everything is up to date. It's all modern. The website is very intuitive, user friendly. Lots of little cool gadgets like the little nighttime mode. I told you guys you got to put that nighttime mode on. You know what I'm saying? And then we got the focus mode over there too to get rid of your distractions. So when I throw that on there, I'm on elite mode. You see, I go to Super Saiyan mode when I put that on. As far as learning at nighttime, I like to study at night. So you do things like this, and then focus mode, get rid of all the distractions, and I could just get straight into my classwork. Just hit the play button, bingo, and then you're like right there in the zone. You're right there in there, and then we got the quizzes built in there as well. And so the quizzes, are going to help you as far as your competency with learning this information. So make sure you go through the each class. Make sure you do the quizzes as well. If you have any issues with the website at all, you have direct support. No other website, no other platform. You have direct access to whoever those so-called gurus are or their tech support to even help you out. But we're live in this. So all you got to do is just reach out to your message, which you just, go over on the side here. You can go to the messages and you can send me a message directly when you need some assistance. Or if you see me live, which I am live pretty much for the most part, you can go right here in the chat bubble and just send me a message directly, So I'm, helping people all throughout the day. So aside from trading, I'm running this really nice platform that we have here. And I really wanted to be successful, but I need for Wall Street Jack Boys to really pay for itself and stop eating me up in the pockets for trying to deliver the best value in the whole entire market. All right. So, and as an African-American man, I do take pride in actually doing that, So again, I want to give a shout out to all you guys who's actually been supporting us, throughout the years, whether it's monetary support or whether it's just, hey, spreading the word. I see you guys like Terry, you guys on the YouTube side that share the videos and stuff like that. I appreciate that. So, yeah, I just want to give you guys a huge shout out on that. And then for you old members too, if you didn't take the new courses, brush your shoulders off, get the dust off, go through the courses yourself, go do the quizzes. Let's see how well you are, how well you can handle that. So, but yeah, that's what it is, man. So again, WallStreetJackBoys.com. Make sure you guys check that out. And again, we're going into hoodie season again. You'll see I got the hoodie popping off right now. It's still a little warm outside, but it's never too late for you to grab yourself some hoodies. So you guys can check that out when you go on the website, go to the merch, and then you can get your gear from right there, right up here at the merch. Get your mask and all that. You just go right there at the merch. All right. So with that being said, yeah, you got to get the hoodies popping. You feel me? But just remember, you guys, tomorrow the markets are closed. So you're going to relax, chill with your fam and everything. We'll get back in the markets on Tuesday. Going into this week, it's going to be a tricky week. So we want to actually let the markets catch its breath and see what's really going to happen. I will say that I am still long gold and silver. I actually picked up some new gold this week. For you guys that's on the website, in the groups, let's go to the groups here. If you're on your dashboard page, you can go to your groups right here. And, I post a couple of links in there for you guys that's looking to get your hands on some stuff right here in the gold and silver group. And if you got some insight, definitely share that, community, man. This is how we grow, man. I don't know it all. You feel me? I don't claim to be a know-it-all. I do know a lot though, but so, basically you just go in here, you can go to the feed or the discussion and you can check out, what's going on in the gold and silver group. But yeah, still long here. There's some posts in here. You guys can see certain things that we posted in here. Like I told you guys, I just ordered some Perth Mint gold from this particular website. They got it in stock right now. They got small quantities. So, you can get that from there. This Perth Mint, some really good stuff. But lots of different things that we got in here. I post certain sales when, certain, brokers or dealers are actually, having some nice sales, even some really nice coins like this seahorse coin. This is pretty cool. So gold and silver, I'm still long on. And I think that we're still in a buy position on gold and silver. It could go down depending on, I think if the dollar starts to strengthen up, which is look like it's trying to strengthen up because it's lost so much value so fast. However, I take all of this as buy signs for silver and gold. I think that, again, we're not buying at the top. We already had some sell off in there. And so we had a good range on gold and silver. So that's my outlook going into this week, man. You know, if you guys have any other questions, make sure you hit me up. But with that being said, man, I'll let you guys get to your holiday weekend. All right. Peace.